All right, if you're new to the channel and you don't know this already, I've recorded quite a few SoFi videos. And in these SoFi videos, I typically have a very bullish sentiment. There's a few things I'm concerned about here and there. I'll chat about those few concerns. But as a rule, I'm extremely bullish on SoFi stock. If you don't know this, I own SoFi stock. It's a top 3 holding for me. It's a very large position for me. And since the stock has been beaten down for so long and the stock price has been so low for so long, I've been able to pick up a whole lot of shares, which has resulted in it being a very large position for me. But every time I post one of these videos, without fail, someone recently over the last 6 to 9 months has said, or multiple people, SoFi stock is a scam. I'm done with this stock. I can't handle this stock. No matter what they do, it goes down, etc. and so forth. There's a general sentiment from some people that SoFi stock is a scam, okay? So I want to talk about whether or not SoFi is a scam in this video today. And we're going to talk about some psychology with stock picking as it relates to what kind of time horizon we need to look at and what we need to expect from a stock that we're buying in the market. I'm excited to get into all that, but first, if you're new here, I'm Austin. I'm a co-owner of cloudmusically.com. I'm also a stock market investor, and as I already said, I'm a SoFi shareholder. If you're not one of those 3,700 or so subscribers, go ahead and click that subscribe button, drop a like on the video. That helps the channel in a massive way. I appreciate you for doing that. So let's get into it. What people are frustrated about mostly is SoFi share price, okay? What people are talking about is not the fundamentals. They're not talking about the revenue growth rates. They're not talking about the EPS growth rates. They're not talking about the fact that SoFi just reported their second consecutive GAAP EPS positive quarter. They're talking about the share price specifically. So if we look at the stock price since the company went public, stock went public around 11 bucks. The stock very shortly after going public ran up to the $25 range, and that's the highest it ever was. And if we take that peak of $25.14, the highest closing price ever, to today, that's more than a 70% drop. So anyone that's been in the stock since the $25 range, they're probably already shaken out. They've probably already sold their shares, or they averaged down consistently over the last 4 years. One of those two things happened to all of those people. They either sold out when they felt like the stock wasn't going the way they thought it was, or they've averaged down and they have a very large position with a way lower cost basis now. The stock is trading at $6.94 as of recording this video. That is substantially lower than the $25 range. But something to remember around stock price is that stock price is not always directly related to fundamentals in the short term, okay? Whenever the stock was 25 bucks, SoFi was way weaker of a company, so much less revenue, extremely EPS negative. They were losing cash like crazy, a way less diversified business. They didn't have the bank charter. This was a shell of what it is now. The company now is insanely more strong than it was in 2021 in January, whenever we were in that hype bubble clown market. Every stock was flying to the moon, specifically companies that were money losers. And SoFi was a massive money loser in 2021, and it still reached those $25 ranges. So a bad fundamentally company like SoFi was in 2021, reaching $25, and then a fundamentally strong version of SoFi is trading at $6.94. The SoFi that has 2 consecutive quarters of EPS profits, the SoFi that has 30 to 40% revenue growth every single quarter on a year-over-year basis is now at $6.94. It just doesn't make sense to a lot of people. This version of SoFi is so much more diversified. They've got 3 beastly legs of the business. They've got the lending business, they got the financial services business, which is growing disgustingly fast, and then they've got the technology platform with Galileo and Technesis, which is growing very respectably, hitting all-time highs for number of total connected accounts. So first thing to remember about this is that the fundamentals and the stock price aren't always one-to-one. We can have a fundamentally weak company that is flying to the moon with no rhyme or reason, and then we can have a fundamentally strong company that's getting disrespected by the market for months, if not years. And what's happened to SoFi recently is that their fundamentals are getting stronger and stronger, and the stock price is either staying the same or going down. We'll get a pop after earnings to the positive most of the time, and then it gives up the gains lower than it was before. We've got SoFi sitting at a price to book of about 1.28, which is just a little bit higher than someone like an Ally, who's considered a competitor of them in the banking space, and way lower than someone like JP Morgan at a 1.7 price to book. So it is fairly valued on the arguably most important metric for banking stocks, which is that price to book. We've got a forward PE of about 88, which yes is high, but is definitely going to come down substantially over the next few quarters as they keep on reporting EPS positive quarters and raising that EPS guidance in the future. Their EPS guidance for the next 2 years is extremely strong, and the EPS growth that they're expecting from the company, which in their own words is a conservative view, is very, very nice. The forward PE when we look out to 2026 is about an 11, and Bank of America and JP Morgan and Wells Fargo, when we look out to 2026, is also about an 11. So when we're looking on a forward basis, multiple years out, long-term basis, the stock on a price to earnings ratio is very attractive right now. And this is all while SoFi has 37.5% revenue growth, 355.78% net income growth, 140% diluted EPS growth, 258% net profit margin growth, and 361% operating income growth. Is there another bank company out there that's going to be looking like this? Absolutely not. Is there another fintech company that has growth rates like this? No, absolutely not. This is ridiculous. They're in the process of turning the profitability corner while still keeping those revenue growth rates really, really strong, really respectable, and they're diversifying the business more and more for financial services and tech platform to take up 50% of the revenue by the end of 2024, while lending is also going to take up the other 50% of revenue for 2024. So they're diversifying the business, they're profitable, the net income is growing like ridiculous, over 10 times of what the revenue is growing. The revenue is growing in the 30%, EPS is growing, operating income is growing. What else can you ask for? So is SoFi a scam? No. A company that beats on revenue and beats on EPS every quarter for the last 10 quarters is not a scam. Just because the stock price is not going where you want it to go in the short term, it doesn't mean SoFi is a scam. It also doesn't mean you have to own SoFi stock. If you don't want to own SoFi stock, don't own SoFi stock. If you're looking for a 3 to 6 month hold, there are way better stocks out there. If you're looking for a 3 to 5 to 7 year outlook, this is one of the best stocks in my opinion, based on the risk reward, based on the valuation right now, the forward PE, the price to book that we're looking at on this company, and the growth they have moving forward. Not to mention, Anthony Noto is one of my favorite CEOs to listen to. This guy is just on another level as it relates to finance. It seems as though he's always making the decision that's going to benefit the company 1 to 3 years in the future. Not necessarily what's going to benefit the company right now. He wants to worry about future growth and turning SoFi into one of the greatest financial related companies in the entire world. And I think he's doing that, and he's proving it quarter in and quarter out. So it's probably obvious at this point in the video, but do I think SoFi stock is a scam? No. What's actually happening is that the fundamentals and the stock price are disconnected for now. For a growth investor, this is a rare thing that we get. When we have a growth beast company that's flipping the profitability corner, that's not soaring to the moon already, is crazy. And it's a really, really important opportunity to seize if you want to be a SoFi shareholder and if you were already looking to get into SoFi stock. If you're not interested in the company and you can't get behind what they're doing and you think that it's too highly manipulated, that's fine. Stay away from SoFi stock. But if you're a growth investor, I think it's worth checking out SoFi and seeing if you see the same things that I see in the company. Maybe you don't. Maybe you look at the company and you find something that you really, really don't like. If you do, I want you to put in the comments below what you found that you don't like. I want to look into that thing as well. I'm always interested in hearing the bear cases around SoFi as well. When people just say the stock is a scam because they're looking at the stock price only and they're not actually looking at the fundamentals of the company, that's where I have an issue, right? So let me know your bear cases with SoFi in the comments below, or let me know if you agree with me and you think this company is absolutely not a scam and it's a very, very attractive opportunity for a growth investor because we're getting it at such low levels right now on the valuation metrics that we were looking at. Looking forward to seeing your comments. I appreciate you being here in a major way. Thank you so much. Have an amazing day.